Economists see potential for an improved budget outlook due to improvements in energy and logistics. This time last year, South Africa was edging closer to the possibility of stage 8 load shedding as Eskom battled unplanned breakdowns that disrupted production and raised operational costs. At the country's ports, backlogs reached crisis levels, with vessels and containers anchored offshore due to operational challenges in November. As Nedbank economist Isaac Nosipho explains, there are signs of a turnaround.
A few weeks ago, I think that was about in August, the latest update from Transnet was that the backlog had been reduced to about 2 weeks. The contracting of a private sector operator for the Durban Pier 2, the International Container Terminal Services, the Filipino company, to operate the port for an initial 25 years, operate and expand it. We know that there's some litigation related to that, but we'll be watching that. But what's encouraging at the moment is that operations at the Durban port are turning around, and that's quite very important for the economy, for the cost of doing business in South Africa.
In the first 5 months of this year, revenue has been showing encouraging trends when compared with 2023. Year-to-date, revenue is up 7.1%, but still below the 2022 to 2023 numbers. At that time, commodity prices were favourable, boosting corporate tax collection significantly. Nosipho says personal tax is expected to grow by 14.2%, partly due to two-pot withdrawals.
We said we crunched the numbers. We had to make an assumption about the next 3-4 months, what the total will be. And we're looking at withdrawals for this year totaling about 40 billion. I know that's a bit conservative, it's very difficult to tell what the figure is going to be. We're heading for the festive season, people want to spend, whatever. So, but we believe that, that 21.4 within basically 1 month was just the surge, the initial surge in applications, and they should come down. That 21.4 is not going to be maintained.
The formation of South Africa's unity government has boosted confidence and reduced political risk in the markets. However, concerns about the public sector wage bill remain.
In the February budget, for the next 3 years, National Treasury worked on the public sector wage bill increasing by an average of 3.2% over the next 3 years, which, quite honestly, would be unrealistic unless employee numbers are reduced.
Debt stock is expected to increase at a slightly slower rate due to the gold and foreign exchange contingency reserve account, or GIFECRA. At the same time, analysts do not expect the mini-budget statement to trigger a ratings downgrade. It's unclear if Godongwana will raise the possibility of lowering the central bank's inflation target to 3% from the current range of between 3 to 6%. Radebe, SABC News, Johannesburg.